Atul Suri, trader at Rare Enterprises, joins us now in our studio. It has become a rare appearance as well, isn't it?
Not really. Always there.
All right. Well, thank you very much for joining us, for dropping by.
Pleasure.
What's the quality of the Nifty chart itself looking like? I mean, we have seen this extraordinary run all the way to 7,900. So many doomsday prophets and skeptics have been proved untrue at every level. 7,500, 7,700,
Sure.
7,900. Does this still remain a buy on dips opportunity for at least the rest of the year?
Absolutely. And I think the reason today is a special day actually. You know, today is it's 1 year of the bull market.
Okay.
The market hit a 5118 low on 28th
Oh, we spoke
of
about
August.
that.
Discussing that, in the break.
Who said it first?
No, we said it when you were not there.
Who said
But
it
anyway,
first on air?
Okay. Okay.
I agree. It's a 50% uptick. Yes.
It's 48%. It's 48%. I think the small cap index is up 100%. Mid cap is up 80%. So, from that point of view, Lata, we've had a very good bull market. It's been 1 year and it's a great time to, really consider what's happened. And the bigger question is what happens going ahead. I still hold my view that, 10,460 on the Nifty by May 2015, which is another 33% from here. I've been holding that view for some time, and I continue to hold the view. And the beauty is, as you said, that bull markets, as Soros said, is built on walls of worries, and those worries are still there. So when I see the channels and I see people really fretting and fuming and being worried, I feel really good. When this consensus bullishness, I would be worried. So I think we've had a very good 1 year. I think going ahead also will be good. What will change is the character. I feel that the first stage of any bull market is very PE driven. It's more a question of valuations. Whatever is cheap goes up. That's why the small cap index is 2x performance. Or for that matter, the sector that was the weakest was capital goods. It's up 112-15%. So and what's the worst performing? No guesses. It's FMCG, which has been doing well. So what really you have is the first stage of the bull market, which is very valuation driven. The second stage, and I think we will move towards that, or I think we are moving towards that, is more EPS driven, which is going to be performance based. So I think the next stage of the bull market, it's not going to be just that everyone that is cheap or not done well is going to be rewarded, but which companies perform well are going to do very well. And you'll find that a lot of people may actually miss out. I mean, a lot of stocks will miss out this next stage simply because they do not perform. So I think it's going to get more qualitative. And I said the first stage is PE driven, and I think we're going to move to an EPS driven kind of market where performance is going to be rewarded. And I think this is what's going to be the change in strategy.
Okay. Well, since you sound so emphatically bullish, nevertheless, this question has to be put. What is the kind of bottom for this market? Is there a level below which you may want to at least give a short-term hands-off in the market?
Yes.
I think
so. I think so. That, I really come from a very classical Dow theory kind of thought process. And for me, I think the last major bottom was at 7540, which is, I think, 4-5% from where we are. And, classic, even if you look at the US also, the market corrects, it makes a higher bottom, takes off and moves to a new high. And a lot of global markets are doing that. We are not any special. A lot of markets are doing that. And I think that 7540, which I think was also where the 50-day moving average is, plus where the recent bottom is something which I would be worried, which gets violated. Till then, I think it's a good buy on dips market.
Okay, Atul, hi, good morning.
Morning.
Actually, the last time when you stated this 10,460 target, we were very eager to get you on the show and ask you how you actually came up with such a precise figure by the end of 2015. But be that as it may, what do you see the Bank Nifty doing? How much will the Bank Nifty participate to take the Nifty there? And what are the key levels to watch?
I think the Bank Nifty has done well. It's been up almost 80% in the same phase. It's kind of outperformed. And it's thanks to the private sector banks. Going ahead, I think that trend will continue. I feel that if I see a 33% kind of up move, I think the Bank Nifty may be another 50% kind of up move. There'll be outperformance. But the whole banking animal, as you know it better than anybody else, Lata, is really the PSU private sector. And unfortunately or fortunately, I think the private sector banks are still going to steam ahead. When I look at the charts of the private sector banks, I feel that there is still a lot of steam left. And I think that they're all going to get into new highs and really drive the Bank Nifty higher. The PSU banks will have their points of worries. They'll have these, very spiky movements which we see. Great moves and cracks, great moves. It'll be very difficult to trade them. So one is really better off, in a smooth bull market to be in the private sector space, the private banking space. And I do think that, and I'm a firm believer that, just in the US you have your Dow theory, which is your Dow transportation confirms the Dow Jones Industrial Average. In India, you have the bank index confirming your Nifty. So, if you really build it on that premise, I think that banking will outperform, but it will continue to be a private sector piece.
So just to follow up to that, within the private sector lot, what are you picking? Because, stocks like Axis and Kotak have already rallied 50% this year. Would they still hold for more?
It will be difficult to speak on stocks because of the positions that Rare Enterprises has, and as we may have a vested interest. I like to avoid talking about that. But I think that the stocks you spoke about, you look at the charts, you look at the way they're breaking and how smooth they are. I mean, it's like people say, oh, this has gone up too much, and like it's too expensive. But hey, what do you have it a month later? Much better out there. So I think that kind of trend will continue. And a lot of sectors, like autos. I think autos have done very well. I mean, I know you like autos hell of a lot. Maybe it's Maruti, I think.
No, I track the sector.
So anyway, I guess autos have been fair with the friends, whether the defensives are moving or whether the cyclicals are.
I think autos have done so well. And if you look at some of the auto charts, they are doing very well. But what I think is, as I said earlier, that there are going to be some surprises. The thing is, what's going to be new? And I feel that two sectors that stand out for me, which I think would surprise you in the second stage of the bull market, which have been underperformers earlier. One is IT. IT has been up something like 28% versus a 48%, so it's underperformed relative to the Sensex. So IT, I think, is a sector that's putting out very good numbers. I think the numbers are very good.
I was going to ask you that, your fundamental theory that the market is higher because growth, I mean, it dovetails with the way in which the fundamentals of the economy have moved, and therefore the Bank Nifty is leading it higher. But in the last, say, 12 weeks, actually IT has been a decent performer.
I think it's going to be even better going ahead. Because one is that IT is more than just currency. We get so lost in the movement of currency, and I think my understanding or my feeling looking at charts is that currency is actually going to be a very steady thing out there. It's not going to give you that kind of crazy volatility you saw last year, and people are going to go beyond and look at performance. IT has been doing so well, and I'm talking even in the large cap stocks. I feel IT is going to be an outperformer, a trade one could get into. Oil and gas, if I look at the charts of crude, Brent, I think it will move to around 95. There may be a short-term spike right now, but I think Brent will move to 95. And this is going to have great impact for the country, the economy, and the oil PSUs. I think there's a lot going to happen there. So here are two spaces which are underperformers in the first leg of the rally, but I think they could do much better in the next space.
Actually, I have to squeeze in one of our Money Control viewers' queries. They have the option to ask you, and of course we have the option to answer or not. This is Pradeep Kumar, who's writing to us from Manipur. He wants to know if it's a good time to enter TCS. Now, we didn't ask you a stock-specific question.
Yeah, but I just kind of answered that sectorially, I think IT is a great space to be in. I think that the large-cap IT is doing very well. So if it kind of answers this question, the timing, is something very dynamic. Whether the market can correct even tomorrow. I mean, it can give you a 3-5% correction and some stocks can correct 5%. I mean, that is dynamic. That's a day-to-day job. But, we are speaking larger trends.
You spoke about Brent going to 95, and that's one of the more bullish opinions we've heard in a while on the chart of Brent. So within, or rather between the ONGCs or the oil marketing companies, where do you see the more lucrative potential?
I think there will be stages. But I think they're all going to do well. The OMCs have been doing very good, and the charts are looking very good. ONGC may have little short-term problems, but going ahead, I think it's going to be a very structural move in ONGC. Again, a disclaimer, Rare Enterprises may have a vested interest in what I'm saying. Please do your own research, but I do think that there's money going to be made. Yes, there may be phases. I think ONGC is going to be more back-ended, but I think when that happens, ONGC, by virtue of its weightage and its size, can actually bring out a paradigm shift in the whole sector there is.
Okay.
I think it will be a very exciting space to be in.
All right. Well, I know you're giving us a target for 6 months down the line, 9 months down the line.
9-10 months.
But, September tends to be kind of a trend-setting, trend-changing month. So this September, what should we worry?
I really wouldn't look at life that way, Lata, because
but there are a bunch of viewers out there who do make their money on a month-by-month basis, maybe even day-on-day basis. But is there anything that there is a near-term danger?
Just give me a coin.
No, he's generally out, I think, thrice in 6 months scuba diving.
I meet at the
he doesn't track month-by-month moves. It's just long-term moves.
These are two hip scuba divers I'm speaking with.
It's not that. Not so bad.
So what do you do with the mid-caps? I mean, you were talking about the big outperformance then. Today, look at it. I mean, the mid-caps are double all the frontliners.
Sure.
Do you think for the rest of the year, the money that can be made in mid-caps will be far higher than the frontliners?
Selectively, unlike last year. Last year, as I said, you had a 2x performance. Let's take like at about 140 stocks in the F&O space. For the year, barring 1 or 2 stocks, maybe a Sun TV or a Kane, everything is positive. Everything is positive and hugely positive. Something like an Aurobindo is up 30%. You know, so you're going to get a lot of these, Sonia. But the difference this time is going to be that the company will have to give good performances. Stocks are not going to go up just because they are cheap. In fact, you may have a 30-35% move in the index, and many more stocks will be negative simply because they will not perform.
Give us sectors: mid-cap IT, mid-cap pharma, capital goods. What are you looking at?
I think pharma, mid-cap pharma has been awesome and will continue to be awesome. I think mid-cap IT selectively, not all. I think auto ancillaries. If you look at the spaces, like look at Bharat Forge, what it has done. It's been one of the smoothest stocks of the last 1 year. Motherson Sumi, and you know, so many of them. So you're going to have these, Sonia. But this time you'll have to be a little more selective in terms, wherever you get performance, I think you will continue to see this kind of price moves there are. But the key word, as I said, it's going to be EPS driven. It's just because something is cheap, it's going to go up, may not hold water.
Absolutely. Actually, eye-popping moves in Havells actually up about 100% over the year, and the last 20% has come practically in a jiffy, even before you blinked. Atul, when you look at that 10,500 target of yours, you're banking on private banks, you're banking on OMCs from what you said, IT companies. What will not move? Where is the avoid? Or the underperformance?
Yeah, see, when you have such a large index move, you're going to have most things perform. But something like this may be contrary to what most people think. Like capital goods has done very well. I think capital goods is going to be very selective. In fact, I feel a lot of capital goods stocks are already, as I see them, correcting. You know, the market is almost at lifetime high. A lot of stocks have slipped. A lot of stocks have slipped. You know, so I personally think that in the capital goods space, which has done well, as I don't say that you'll be losing money, but you will have to be much more selective.
All right, Atul Suri, I hope you make a lot of money for your clients and go for many, many more scuba diving trips. Thank you so much for joining us and giving us that bullish view. That's the word coming in from Rare Enterprises.